Hey guys, what's up? I'm Erin and welcome back to the channel. For the longest time, owning a home has been associated with the American dream. And with the median price of a home in the US sitting at $416,000, for many, it feels like owning a home is unattainable right now. And it's not hard to see why this price point is such a stretch. According to the Bureau of Labor and Statistics, the median household income is about $75,000 to $106,000, depending on if you're looking at a family of 2 to 4 people. Then we can consider that general rule of thumb when you're buying a home, which specifies that no more than 28% of your gross household income should go towards your mortgage payment. Well, let's assume we have a family looking to buy a home for the median price of $416,000. With a 10% down payment, a 30-year mortgage, that would come to roughly $2,500 a month. Well, let's assume we have a 2-person family and a 4-person family each looking to buy this home, each earning their median respective income based on their respective family size. For the 2-person family earning $75,000 a year, this home would take up 40% of their budget. And for the 4-person family earning $106,000 a year, this home would take up 28% of their budget. So that means the 4-person family just made it within the guidelines. But still, the argument that homes are becoming harder for the typical family to afford has a lot of merit. Home prices have increased at a rate that has far outpaced wage growth over the years. In 1975, the median family income was $13,700, and the median home in the US cost a little bit more than $39,000. So that means the typical home costs 2.96 times the typical income. By 1995, that ratio had risen to 4.17, and today, if we're looking at a 2-person family, that housing cost to income ratio sits at 5.54 and 3.93 for a 4-person family. It's easy to see that the general trend is that homes are becoming more expensive relative to income. And so many people have this belief of, I have to become a homeowner, thinking that it's a marker of financial maturity or a necessary step in the wealth building process. But is it? Is owning a home essential to building wealth? Let's consider this common belief. A lot of people tend to view a home as an investment. You buy a home and you expect that its value will increase over time, which is absolutely the trend we see with homes and real estate in general. Over time, home prices do tend to increase, thereby increasing your net worth, and if you go to sell this home, it could certainly provide you with a big influx of cash. And depending on what you do with this cash, that can create a lot of options in your life. Say you're a retiree, you decide to sell your home, you downsize, you take the excess money from the sale of your previous home and invest it. That excess money could certainly provide you an income that you very well may be able to live off of. Or maybe you simply decide to sell your first home, a starter home, it's appreciated in value, and use that money to upgrade with your next home. If the home you purchased increases in value and you decide to sell it, it absolutely can create a lot of possibilities for you. And a lot of times it can feel like the returns on real estate are exponential. And in a way, it's kind of because they are. Because for most of us, our homes are leveraged. Let's say you buy a $400,000 home and that you take out a $360,000 mortgage for 30 years. You live in that home for 7 years, its value appreciates to $500,000, at which point you sell this home. You sell it for $500,000. You still have to pay back the remaining balance on your mortgage, but then you're left with $168,000. You just turned your initial $40,000 investment into $168,000 in just 7 years. That's almost a 21% annualized return. That's phenomenal. And that's the power of leverage. You put a small percentage down relative to the actual cost, finance the rest, and then when this asset increases in value, your returns kind of grow in an exponential fashion. But keep in mind that leverage also works in the opposite direction. If the asset you bought decreases in value, you end up in a far worse position. And that's the thing with real estate. Yes, typically the value of real estate does go up over time, but there's no guarantee that the value of the home you purchased will go up. The longer you're in that home, the more likely it is that the value will go up. But if you're in that home for a short term, there's absolutely no guarantees. Maybe its value goes up, maybe its price stays flat for a number of years, or maybe its value actually declines. We really don't know what'll happen. And not only does it depend how long you're in this home, but it actually depends a lot on timing, like when you buy the home and when you sell the home. It depends on your location, and it also depends on overall economic market conditions. And I love the saying that financial expert Ramit Sethi says, "Your mortgage is the minimum you will pay for a house, and your rent is the maximum you will pay." Because he's absolutely right. Your mortgage is that base price you pay. And then on top of that, you have your taxes, repairs, perhaps an HOA. And then you have to consider all those transaction costs associated with buying or selling your home, which certainly aren't insignificant. On the other hand, when you rent, your rent is your housing costs. Period. End of story. Let's say there's a leak in the roof of the house you're renting, and it's said that you need a new roof. It's a $10,000 repair. Your landlord foots that bill, not you as the renter. When you're the homeowner, it all falls on your shoulders. It's so incredibly important to remember that there's far more to home ownership than simply the price you buy a home at and the price you can sell it at. There's a whole slew of costs that go into owning and operating a home. And all of these costs can detract from your home as an investment. And that's why it's traditionally recommended, if you're looking to buy a home, that you're living in it for at least 5 years or longer. Because if you're only going to live in a home for a very short period of time, it's very hard to make it a profitable investment because of all the transactional costs associated with buying and selling. Another analogy you always hear about home ownership is that a home is a forced savings account. To a degree, it certainly can be, because that mortgage payment comes due every single month and you better pay it or the bank will come and take your home away. And most people have a really big incentive to not let the bank come take their home away so they don't miss this payment. And a portion of this payment goes towards paying down the principal on the mortgage. That is yours to keep should you ever sell the home. So sure, as you pay down your mortgage, you're setting aside money. But I certainly don't look at home ownership as being identical to having a savings account to draw on. Sure, if you're close to retirement, you could take advantage of something like a reverse mortgage, or perhaps you open up a HELOC, a home equity line of credit, and take a loan against your home. Yes, these can provide you with an influx of cash, but it's not the same as a savings account. They come with a lot of rules and a lot of restrictions. For instance, if you take out a HELOC, the bank is generally going to charge you interest on that. And it's not just that you're borrowing against your home. It's that you're establishing a new loan, and this loan likely has to be paid back. Likewise, a reverse mortgage comes with its own set of expenses and restrictions. But if you compare these things to a savings account, if you just decide to take money out of your savings account, at no point is your bank going to be like, "Hey, are you going to put this money back?" That money is yours to do what you wish, when you wish. For many retirees, their home value makes up more than 2/3 of their overall net worth. And if your home is fully paid off, that can drastically reduce your monthly expenses. And that's a huge perk of home ownership, that one day you don't have that monthly mortgage payment. But having a fully paid off home is not a substitute for adequate savings and investments to support your lifestyle. And then there's the biggest argument you hear for home ownership and against renting a place. That being that renting is just throwing away money. And I think that couldn't be further from the truth. First and foremost, you have to consider that you have to live someplace. So paying for a place to live is not throwing away money. It is ensuring that you and your family have a safe place to be. It is an essential part of life, whether you are renting or buying. And there's a lot of perks that come with renting, starting with knowing exactly what your housing costs are going to be. As I mentioned before, if there are repairs that come up, you're not on the hook for any of them as the renter. Your landlord will take care of them. There's also a lot of freedom and flexibility. If you decide you want to move, that's very easy to do as a renter. If you own the home, you have to go through the whole process of listing it and selling this home and making sure it's sold for a price that's appealing to you. However, as a renter, you simply end your lease, pack your things, and go. You can easily move across town or across the country. Then consider, on average, it's often more expensive to own than to rent. According to Redfin, on a national basis, the average home costs 25% more to own than rent. And homeowners on average now pay an additional $1,176 per month compared to the typical rent at a professionally managed apartment complex. What if you were to invest $1,200 a month for 30 years? That could grow to $1.7 million. And I'm certainly not trying to bash homeownership. I actually think homeownership is absolutely wonderful, but I don't think it's an essential piece of the wealth building process. I think you can build wealth while owning a home, but likewise, I think you can build wealth while not owning a home. And if the only option is to buy a home that is beyond your means or stretches you to the financial breaking point, it can be really hard or darn impossible to build wealth while owning a home. When you're building wealth, there's really only one rule you have to follow, and that is to live below your means. And for most of us, housing is going to be the biggest line item in our budget. So that means it's an expense we want to get right. We want to keep our home expenses appropriately in line with our income, so we still have room to do other things in our budget. We can still save, we can still invest, and just as importantly, we can still spend on doing the things we enjoy today. If you end up buying a home that is beyond your means or at the very tippy top of your budget and it makes it so you can't save or you can't invest, you will never build wealth. So owning a home isn't an essential piece of the wealth building puzzle. It can certainly help and it can be great under the right circumstances, but you can absolutely build wealth without owning a home. What are your thoughts? What do you think about home ownership? Leave it in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.